Now, First City Monument Bank suffered a bit of a setback last year as there were declines in both its top line and bottom line numbers. Ladi Balogun, the bank's group CEO, joins us from the NSC to discuss the path he would like to chart this year. Ladi, thank you so much for taking the time out to join us today.
Thank you very much.
So we saw a drop in the profit after tax, down 34% from 2016. But let's talk about the key pressure points. What were the key pressure points for the bank last year?
Okay, thank you very much. I think, first of all, what we saw last year was a reduction in revaluation gains that we had made in 2016. 2016 saw very significant gains that we reaped from the devaluation of the currency because a big part of our balance sheet is in dollars. The level of revaluation gains in 2017 was lower because the Naira devalued less. But in terms of core operating performance, we actually saw that the underlying core operating performance of the group improved. But as you rightly noted, there were still some pressure points. Cost of funds were fairly high because we were in a very high interest rate environment. And we also saw that our cost of risk, which is impairment on bad loans, while it came down last year from 2016, it was slightly higher than we would consider the norm. In fact, significantly higher. But we see both of those trending down in 2017, or 2018, I should say, and therefore look forward to continued growth in profitability.
Okay, so one of the points that I read about your impairment charges was that the default by Etisalat added a lot of pressure. So now that it's been sold to Teleology, I believe, do you think that that will further help to reduce the pressure on your loan book?
Well, I think for us, Etisalat is not a huge exposure. It only accounted for about 5 billion naira of our entire loan book, which is less than 1%. But certainly the fact that a new core investor has been identified, we wait to hear their plans, and hopefully they will be able to restore the business to the path of sustainability and meeting its obligations. And of course, when that happens, we do expect that we will see right backs to the loan book and profitability.
Let's talk about your plans a strategy to boost your balance sheet in 2018. Now, late last year, you completed the acquisition of additional 60% stake in legacy pension managers, increasing the bank's stake to 88.2%. How is this going to impact on the bottom line, the business, and more importantly, why is FCMB so confident about the opportunities in Nigeria's pension space?
Well, first of all, in terms of the impact that this will have, I think very importantly it helps us diversify our earnings and sources of earnings. Legacy Pensions, which is a business that we acquired, is in the relatively attractive pension industry that exhibits very high return on equity, very stable earnings, and also very consistent dividend stream. So we think that all those will have an impact. We were previously a 28% owner of the business, and now, as you said, we've moved to 88%. So I think the impact will be that more dividend for our shareholders. We'll also see more diversification and growth in earnings. From an operating point of view, we will be able to accelerate the growth of legacy pensions by ensuring that the business can leverage on our distribution network, which, of course, not only is our 200-plus branches, but also a number of digital channels that we have. So our belief is that this is a strategic acquisition that will accelerate the growth of legacy because of the relationship that it will have with our banking group. But also it would mean a higher level of profitability and dividend payout for our shareholders.
Now, earlier this week, FCMB was in the headlines about a potential focus on the UK side to the business and maybe a greater focus on retail banking. Can you talk us through that?
Sure. So FCMB has been in the United Kingdom now operating a wholesale banking operation for the last 4 years. It's been a profitable but small operation for us, with the focus being on trade finance as well as investment banking. So a lot of the investment flows that are brought onto the Nigerian Stock Exchange from our foreign investors or foreign investors that invest in our exchange comes through our FCMB UK operation. where CSL, our brokerage business, has an agency outlet. In addition to that, trade finance has been a key, excuse me, trade finance has been a key activity for us out of the UK, where FCMB UK has now become one of the leading and award-winning trade finance banks in the UK. Both of these activities are very much in the wholesale side of our business. What we see going forward is an opportunity to support more SMEs, and technically to do that, you need a retail banking or retail deposit taking permission. So we're currently in the process of seeking permission to vary our permission towards retail. It doesn't mean that we will be opening branches in the UK or going down to banking many individuals, but really just to make sure that we can bank more SMEs that trade with Nigeria, in and out of Nigeria, as well as a number of high net worth individuals who may want our services, banking services, typically Nigerian high net worth individuals.